welcome. I'm Yvonne Caribou from the Center for Innovation and Entrepreneurship, and welcome to another event for Global Entrepreneurship Week. So excited to have this event from Region 9. I'm really curious to hear about this revolving loan funds and the other resources that Region 9 has available. Our speaker today is Sam Smith, so I'll turn it over to you, Sam.
Hi, yeah, thanks for having me. I'm really excited to be here. Really glad to be talking about this. As Yvonne said, my name is Sam Smith. I am, as you see on the screen, a economic resiliency coordinator for Region 9 Development Commission. And I don't think I have enough time to explain to you what all that job entails. It's a little bit of everything, but the long and short is helping get South Central Minnesota through the pandemic and out the other side to be able to withstand economic shock a little bit better in the future. Hopefully the next one's not another 100-year pandemic. I have served on sort of both sides of this coin professionally. I have been a consultant with the SBDC out of Rochester. Did that for a couple of years. I see we have David from the SBDC, so hi. And have done my fair share of helping businesses get up and going of all sizes, stripes, shapes, and valuations. And now am serving on the other side of it, financing them once our good friends at the SBDC have them help their plans being shaped and up and ready to go. We help get them the capital and resources they need to get out, break ground, and get going. So here we go. The first bit here is, what so many people dream of dream of being, rolling in money, having more than enough capital to finance their business, get it up and going. The bank and government on the right is sort of what will be really addressing the two prongs of financing a company that are outside self-financing. So the reality is probably not, at least not right away. But it's to make the point that there are more people than maybe you think out there who really, really want to give you money. They really want you to take their money to start a business. Back to the two prongs, there's private. For the purposes of this conversation, we've carved it up this way. Banks being the traditional one that people think of first, to go to a bank, go to a community lender, take out a business loan and get going. Behind that backdrop, there are a lot of other private funders out there. There's venture capital, niche financiers, a good example being something like if you're starting a brewery, there are companies out there that will loan you just the equipment to start a brewery. There are private foundations. There are, the potential to take on a business partner, somebody who's already established, has the experience and the capital to help you get it going. There's crowdfunding that everybody's familiar with, Kickstarter, GoFundMe, all that fun stuff. And then what we do here at Region 9, public funding that many people, entrepreneurs, and anybody with a business idea often don't think to turn to. It's not as well publicized. There's no profitability in it. We're not in it to make money, so we don't have much marketing. We have Corey, who is fantastic, but we have just Corey for all of South Central Minnesota and all of the work that Region 9 does. And so all of that to say, we don't have a huge marketing arm. We don't leverage, vast resources of capital. And that's just loans. There are also grants. There are also business subsidies. There are local tax incentives. All of these different ways to effectively either find, back to the title of the slide, other people's money, free money, that often gets left on the table because a business entrepreneur doesn't even think to look, doesn't even know to ask. How do you choose public or private financing? It can be very intimidating. There's just a bewildering number of choices and places to start. The short answer is ask a lot of questions. Talk to David. Talk to the SBDC. Find a mentor. Longer answer is plan. Stop. You have an idea. You have something you know is going to make money. You're confident, keeps you up at night. Put the brakes on. Put your idea down on paper. And even that can seem overwhelming, but back to free and other people's money, there are people out there who want to help. There are resources out there for you to help write the plan. There are templates available from the Small Business Association. There is the SBDC, Small Business Development Center. They will pair you with a consultant for free, who will work with you all the way through the plan and put together a financing structure. There is SCORE, the volunteer network of mentors, business professionals who have achieved a great deal of success and feel compelled to help those new crop of entrepreneurs get started. It's not often particularly fun. It's not real exciting. It can be with the right attitude. I know that a lot of entrepreneurs, they want to go, they've got their idea, they've been sleeping on it, dreaming about it, and they want to hit the ground running. One of the biggest mistakes they can make is to get ahead of themselves in that and get very heavily in debt before they understand, have a solid cash flow, have projections for 2-3 years of profit and loss. All of these terms that financiers, banks, and venture capitalists, and frankly, even public financiers like us, are going to want to see. And it's not because we don't share your vision. In fact, I get as excited as the next person about a great business idea and a great proposal. But having the plan in place demonstrates that it's more than just an idea, and you have a roadmap set up for how to get there. So back to how do you choose? It's a false choice. You don't have to choose public or private. You can explore both options, and you really should explore both options. In fact, a lot of packages, a lot of the businesses that we deal with at Region 9 and that I've dealt with at other organizations and help get going, they do have both. In fact, we encourage them to have both. Not only does it diversify the risk to the lending organizations, banks will often offer you a lower interest rate if a portion of your business is financed publicly. Granting organizations may be more interested in exploring your idea if you have support from both the private sector and the public sector. The more you can diversify your financing, oftentimes the better. Not always, every case is unique. And back to the plan, and our friends at SBDC, SCORE, and other places, having that structure in place and articulating that financing plan ahead of time helps everyone feel more comfortable. And the more comfortable everyone feels, oftentimes, in my experience anyway, they're a little more likely to offer you a little more financing with a little bit better interest rate. So dig into the details a little bit. Back to the word bewildering. There's 7,000 banks in the U.S. And of those 7,000 banks, many of them have hundreds of local branches. How do you even pick one? It comes back to ask questions, right? They compete for your business. Back to they really, really want to give you their money. They really do. That's how they make their money. That's how their shareholders earn dividends. You have a good plan, you can shop that from bank to bank. I would encourage you to do it. How do you find other ones? Go to your local SBDC office. They work with dozens of banks. They know commercial lenders. They're on first name basis with many of them. They can't necessarily always make a recommendation, but they might be able to point you in different directions. They may know, have some ideas about different venture capital firms that you could connect with. Ask questions, ask, do not be shy. One place that you can turn to also is Southern Minnesota Initiative Foundation. They are technically a private funding organization. They operate more like a public funding organization than a granting agency, but they offer small business loans for startups, for business expansions, and back to diversifying your financing. They're one more institution that could potentially contribute to the bottom line for your operating capital and startup. And then from there, you can always and should, I would encourage you to check with specialized business centers. There are organizations throughout the state and country that have organized around various priorities, for very good reason. There is a women's business outreach center. They have an office in Minnesota and they finance women-owned startups. There's a veterans business-owned outreach center in Minnesota. Same thing, they help veterans get started. Minority Business Development Agency help people of color establish businesses, work on expansions, and even professional trade associations. Pick an example. If you are interested in starting a welding business, a welding company, you could talk to the American Welders Association. Chances are pretty good they have a national office, if not a local or regional office. And there would likely be people there who would be interested to mentor someone starting up, and give you tips on how to outfit your shop, where to find financing. Get creative. Do your research, back to your plan. Take the time to invest in that. Okay. Bank loans, pros and cons. Pretty straightforward. It's probably the first thing most people think of when they think of how am I going to finance my business. I'm going to go to a bank and get financing. And for good reason. They're very good at it. Among the biggest pros I could point to is that fourth one with lots of competition. With that competition means the rates for interest are pretty comparable across the board. From one bank to the next, the changes would be minimal. It's worth shopping around, but they want you. They want you to come in the door and they want you to ask. Cons being, it can be harder to get a bank loan. They're more selective and they're more risk averse. They want clients who they are confident, pretty high degree of confidence, will see a return on their investment. Shouldn't come as much surprise, but it's generally a good place, not necessarily to start, but at least an avenue to pursue. Other private options when you get into some of these more niche opportunities like niche financiers, venture capital, angel investors, that kind of thing. Among the biggest pros, they're much more flexible. They want to work close. Oftentimes they work closely with you. Oftentimes they have a higher risk tolerance. People in these positions generally have tons of experience in business. One of the ones that gets overlooked a lot is friends and family. Approaching your family to solicit capital to start a business, a capital campaign. I have never personally worked on a loan where a family has been involved. I have seen it work out great, but the cons being obvious that, things could get, weird if it doesn't go well. The cons for this sort of crop or grouping of financiers, generally there's higher interest rates, especially among the niche financiers. You can get the equipment you need, but it might cost you more. And especially venture capital, they often request or require ownership stake in the country or company, at least. Sometimes maybe a seat on the board if there is going to be a board of directors. Not necessarily a bad thing, but just know that if you pursue that option, be prepared to offer partial ownership or a stake in the company over the long term. Public funding sources. This is the one that often gets overlooked, and we can dig into a little bit of detail here. One cautionary note is you'll see where it's constantly changing. Because it's public funding, and I say we because Region 9 Development Commission, we just received funding to issue a revolving loan program under the Federal CARES Act for COVID relief, right? The moral of the story being it's sort of at the vagaries of political winds. And the only way to really know what's out there is to approach your local city manager, your local county administrator, your local EDA, or us, your local development district, and ask. It does change, it does evolve. It's almost always there in some way, shape, or form. .5 types is sort of flippant way of saying there's loans and grants. Tax incentives from a cash flow and business operations standpoint can lower your overall operating expense, but it's not exactly financing your business, right? It's a way to save money and save on your expenses, but it's a little bit different than financing. Major benefits of public funding, and you'll see a lot of qualifiers here: generally lower interest rates, generally gap financing, generally aimed at business startup. Because again, as the political winds change, so do the parameters on lending. The high point for grants being, you have to know where to look. They can be hard to find. There are thousands of them out there, if not tens of thousands. A pro tip or hint, outside of the metropolitan area of the city of Mankato, just about any business operator in South Central Minnesota or entrepreneur would be eligible for USDA's rural development loans and grants. USDA has a very well-funded business development program for rural business. It does not get leveraged very often, simply because, much like us at Region 9, they have many different priorities, and they have their hands in many different operations. And so the funding is there, but you just have to ask. They have loans, they have grants, sometimes very generous terms on both. And a little side note, they can even help you buy a house with almost zero down if you live, if you're outside of Mankato. Similarly, Region 9 loans, as I said, right now, the CARES Act loan and the political wins, for anyone who is currently operating a business, we're offering 0 interest loans for 2 years and then 2% thereafter of up to $100,000 just to help get you through. But that's only one of 4 different loan programs that we have. The others being aimed more at startups, and one of them offering right now business loans at 3.5%. We're here, I'll go to the pros and cons here. The pros of a public lending organization is we're not a bank. And what do I mean by that? We are put in place in the public interest, presumably because helping businesses get started and get going is good for the community. We don't answer to shareholders, our commissioners and our elected officials don't pull dividends. Their only interest is in seeing businesses grow and thrive. Because of that, we generally have lower interest rates than banks. In many cases, not always, but in many, we can be more flexible on lending terms. We can extend things out longer than a bank might be comfortable with. Often we're available when a bank says no. So just because someone says no, keep asking, right? There's more opportunity out there. And sometimes require less collateralization for that same reason, right? Because there's a higher risk tolerance in public lending. You might not have to put up the family farm in order to start a business, right? In fact, personally, I actively discourage people from doing that. So all of that to say, everything comes with cons. The cons are we're not a bank, right? And it's not what we do all day, every day, which means sometimes it can take longer to get your funding. The reality is the process takes longer. It's not excruciatingly long, but it might be a matter of 4 to 6 weeks instead of 4 to 6 days. And one of the other cons is it may, in some instances, in the future, prejudice conventional lenders against future loans. It doesn't always happen that way. In fact, if go through the process with that in mind, sometimes you can try to sidestep that and set it up in such a way that it doesn't. But just know that that's a possibility. Grants. Everybody loves a good grant, right? Free money. It can help offset your startup costs. You don't have to give it back. A lot of the times you write the budget and you hand it off to the grant maker and say, here's my plan. Here's what I want from a grant. Cons, they usually do require a match. So just because you ask for $100,000 to start a business, you probably won't get a $100,000 grant. You might get half, which is still a lot less than $100,000, but you'll have to find the other 50 somewhere else. They can be time consuming. It can take a while to apply for the grant, the back and forth with the grant maker, filling out the budget, writing the narrative. It can be intimidating, but there are people who can help. And in my experience, oftentimes back to a lot of people who want to give you money, if you ask for help, they're often willing to give it. The grant makers are. They want you to take the grant. They put the grant in place for a reason, because they want to work with businesses. That said, there's never a guarantee that it's going to get funded. You might go through that entire exercise. It goes up to the board of whatever foundation or a review committee at whatever public institution you're applying to do a grant for, and it comes back with a big fat no. That hurts. It's kind of a blow. But you're always welcome to reapply in most instances. If you ask, back again, ask questions, ask for feedback, they'll probably give it to you and say, okay, well, why was it denied? If you ask nicely and say you'd like help. But the last of the cons can be, in some instances, some grant makers are very stringent on their terms. So just beware that if a grant maker says, lay out their priorities for a grant, and they say that these are the parameters that they're looking for, chances are, unless your application aligns almost point for point with what their priorities are for funding, they won't have much interest in funding it. So you may find yourself in a position where you're either adjusting your business plan to match the grant or misrepresenting yourself to the granting organization. And neither of those usually is going to have a very good outcome. But back to there being thousands and tens of thousands of grants, that's the time where you can go back and start looking for what other options are out there. What other agencies are funding business startups? Have conversations, pick up the phone and call grant makers. Sometimes people are so happy to just talk to somebody, a live, warm body over the phone rather than an email. You might not be able to get them off the phone. So know that that's an option. Know that you can come to us. We can't probably write the grant for you, but we can help point you toward, what some options might be. Your regional rural development, USDA rural development office would be glad to take a call or respond to an email for how they might be able to help. Those are the two biggest. The USDA is probably the biggest grant funder for business startups in this area. Oh yeah, pro tip. If I didn't say it already, ask a lot of questions. Ask a lot of questions. Especially if you haven't started a business before. There are a lot of people who want to help. So the other 0.5 option here for public funding, tax options. They can be kind of confusing. They don't always have a role in what your business plan or idea might be. But back to asking questions, it never hurts to ask. You might be able to, depending on if you're, for instance, if you're building a new building, you might be able to get a tax, what's the right word? A tax break, I guess I'm trying to find the right word, but a discount on your property taxes from your city council or from your county board. You might be able to find something in a tax increment financing district that over the long haul will allow you to do some improvements to infrastructure in the area, right? You might have upgrade your water, sewer, and power. Not real exciting, but if these are expenses you think you might incur over the long term, they can help offset some of that cost and you can direct more money somewhere else. The cons, they can be kind of convoluted. Back to time, they can take months. It's a lot of back and forth with your city manager or your county board, your county administrator. Ultimately, it goes up to the city council or your town hall or your county board to approve or deny your request. back and forth, there's often a lot of negotiation. And that's fine. Just know that it can take time. And similar to grants, because it's ultimately up to the city council or the county board, there is zero guarantee that relief will be awarded. And you can go through that entire exercise and have the best plan in the world and have something that's in perfect alignment in your mind and in your planning partner's mind, and even maybe in your city manager's mind with the intent of whatever ordinance or law you're trying to leverage for a decrease in property taxes. But there's no guarantee that the city council will approve it. This is certainly not to dissuade you from it. In fact, I encourage you to explore it. But just note of caution that nothing is ever certain. And I'll leave you with this. I owe my success to having listened respectfully to the very best advice and then going away and doing the exact opposite. No one said that this is the very best advice. And I'm not saying you should do the exact opposite. Maybe you should do like my 9-year-old back there and just make silly noises. Hey. But the moral of the story being, take your time to put a plan together. Explore all of your financing options. Know that public financing can be a very good one. It's not the perfect fit for everybody, but it is available. And like the hand that's holding money at the front at the first slide, we really, really, really want to help you out. So come ask, and we'll do our best to make it work. Lots of questions, ask them. And know that you can, since this is being recorded, would encourage you to please call us or email us. We want to hear from you. We're here to help. We're the government and we're here to help. That's what it comes down to. We really do want to help. We really do have every intention and every interest in helping entrepreneurs get started, helping small businesses get going, ones that are up and running, helping them expand, helping put their ideas into a plan and their plan into action. I mean, that's what we're here to do. So thank you.
Sam, I've got one for you. Could you expand a little bit on the 0% loan, and maybe talk a little bit about what the organizations have to have, what they need to look like in order to qualify for that?
Sure. The 0% loan, I'll qualify it a bit, is that this is unlike any other loan program that we have. It is back to it being funded from the Federal CARES Act, I believe from March, through the Department of Commerce and the federal EDA. We are a designated lender of this money. The long and short of it is there are very few requirements other than a business has to demonstrate some sort of financial injury from the global pandemic. That's about it. I mean, if you can show that that's what the money is for, that's what it was earmarked for, that's what Congress put it into the CARES Act for, and that's what the president signed it into law for, was as business relief for businesses who have been financially injured by COVID. So anybody who's hurting, anybody who's struggling to make payroll, had to take a hit on how much they're able to draw out of their business month to month. We've helped everything from a cafe to a welder to a body shop. There are no real stringent requirements. In fact, this being one of the unique programs, it's 0% interest for 2 years, and then 2% interest every year thereafter, up to 10 years. So if you want to stretch it out over 10 years, we can work with you on that. If you think you want to pay it down in 4 or 5, we can work with you on that as well. It's up to $100,000, anywhere from 10,000 to 100,000, really to help you get through.
Thanks.
Yeah, absolutely.
So we have a small group. So if others have questions for Sam, you can go ahead and unmute and ask. I see a
Yes,
couple
Sam,
of,
and then that Region 9 application is all online and everything. Is that right?
Yes, it is. Thank you for asking that. Yes. If you go to rndc.org and on the top menu under what we do and revolving loan program, you'll see 4 different loans. The CARES Act loan being one of them. The application is right there. You can fill it out right on your computer at home. Click the submit button. It sends us an email and we have everything we need and we go from there.
As part of that, is there a list that indicates what needs to be sent with that as far as support documentation?
At this time, there is not. The first step is getting that application in. In general, what we would want to see from a business, because this is for businesses who have been operating already, what we would want to see is at least 12 months of profit and loss, 12 months of cash flow, a 2, preferably 3-year pro forma financial projection, in addition to personal tax returns from 2018 and 2019. But this also being a very unique program, don't let that intimidate you, or don't let that intimidate your clients, because we have gotten some through where we're not able to get all of that from them for whatever reason. And this money being help people stay open. So.
Sure. Okay. Thank you. I have received the app and I have forwarded it to clients previously.
Great.
Surprisingly, the terms are really good, and I haven't had many takers with that, but hopefully I will. There's, especially being at 0% for.
Yeah, I'm curious. Thank you for telling me that. I'm curious. Have you received any feedback from them on what's keeping them from applying? Is the application too long, or are they? I'm just curious.
Yeah, that's actually a great question. Some of them have already received several assistance loans. So I think that's part of the issue versus, because, as you know, being in pandemic, you're trying to fill the void of cash flow that is not there no longer.
Yep.
So you really have to decide and make sure that when you do obtain financing, that it's not going to hurt you deeper than how you're already hurt. So I think the reason many have not applied is because of that. They've received the EIDL and or the EIDL loan, so I believe there's some of that. But
Sure. No, that does make sense. And unlike Paycheck Protection Program and unlike the $10,000 EIDL grants, these loans, per the Federal Department of Commerce, have to be repaid. They're not forgivable. So I can see where if someone has already taken grants, they would be hesitant to move toward finance.
yeah, and I think what happens too, with a lot of the things you talk about, there's a lot of sources of funding, and a lot of times many people, they don't have the equity they need for a down payment. So many times some of these, and correct me if I'm wrong, you can couple a bank loan with some public money, like a Region 9 or Southern Minnesota initiative. That's in my experience is not uncommon. And what that does is that gives the bank, since banks are, they're conservative, in their own right, in character, how they are, number one, but number two, they're driven that way a little bit from regulation. So as a result, when there's Smith money or Region 9 money or grants or whatever, I've seen those coupled to help with the down payment or help lower a down payment. So would you agree with that? Or
Yes, it's absolutely yes, especially for startups. Less so around the CARES Act loan, though that is possible. It's certainly not, it would never rule it out. But with startups and expansions, a multifaceted financing plan is often the case. And in fact, I would encourage most, I have not come across an instance where it makes sense not to do that. Having public financing from, as you said, from us or from a city or from Smith, from a bank's perspective, can lower their risk. And it makes it a little more palatable. Or maybe they would do 50 and 25 and 25 or something. And also to those listening in, know that Region 9, Smith, banks, we frequently do work together and are very comfortable, working with you and with these other lending organizations to structure something that everybody is happy with. Ultimately our goal and Smith's goal being getting the business off the ground and ultimately the bank's goal being making money. We usually can find something that works for everybody. So yes, it's a long way of answering your question. Yes, it's very common. But we love the SBDC. We love it. We love it when people bring a plan from the SBDC.
yeah, I think the SBDC is kind of underused because what happens in times like these, people are racing towards funding and they need funding, but the problem is to get a lot of it, it takes a business plan, it takes the financials, the cash flows, building that stuff in, and a lot of times it's a crash course in learning, which is fine. That has to be put together. So my point with that is sometimes the stumbling block is getting a financial package together so we can go grab the opportunity, which is the Region 9, really good loan opportunity. So
yeah, just in the 4 months that I've been here with Region 9 now, at least twice, maybe 3 times, I have told an applicant or directed an applicant, it's a great application, we want to help, but you need to retool your business plan and send them over to SBDC to get that in place. And you guys, they're responsive. It's, again, to those listening, there's no reason to be intimidated by it. It is absolutely in your best interest to do that, to reach out to them. They will work with you. They will get you a plan that is going to maximize your chances of success. And it's also going to maximize your chances of securing funding to maximize your chances of success. So yes, it is underutilized. And I think there is a rush. I have seen it, a rush to secure financing, and understandably so. But having that plan in place, and especially retooling it, even if one already exists, to adjust for disruptions from the pandemic is, while it can be maybe a little bit frustrating to have to slow down and do that, again, it's absolutely in everyone's best interest to take that time. It doesn't take long.
So Sam, say there's people out there that is interested in the CARES Act funding. How long is this funding available for?
Funding is available. I'm going to have to double check, and I can send out an email to verify, but I believe it's for 2 years from the date it was signed into law, which would have been mid-March. So through early 2022. Region 9 was allocated 1.2 million, almost 1.2 million, 1,190,000, I think, which seems like a lot of money, but it's, I feel like I'm on a commercial something. It's going fast, right? Like, it's only there until it's there. When it is exhausted, we do have the option of requesting more. But back to us being public and subject to sort of the vagaries of political whim, there is no guarantee that it will be there. So that's not to say, you know, run and put your application in tonight, but know that it is a limited resource. And I expect that that 1.2 million will be loaned out before the expiration of that 2-year term in mid-March. There's no telling exactly when, but I don't think it will last that long.
Yes, Lindsay, I made a recording of the whole presentation. I know David joined us a little late too. There's a recording of the whole presentation, so you'll be able to watch the whole thing later. David is starting a new business. He's just, you know, putting together his planning and working on a financial business. Very interesting thing. David, is that something that you've thought about in terms of how you're going to finance the business? Are you planning on getting a loan, trying to go for grants? Are you going to bootstrap? What are your thoughts about that? Put you on the spot.
I think you're muted.
Or maybe the muting isn't working. That's exactly what happened to me earlier today. I tried to unmute and it didn't work. That's strange. You can respond in chat if your audio isn't working for some reason.
Hey, I'll wait for David's answer. I have a quick question for you, Samuel. Your experience with Region 9, you guys provide grants, loans for businesses that are small businesses that are operational, or do you do startups as well? If you do that, then what industries do they need to be in? And if you do startups in whatever industries, then what do you require from those startups? What do they need to show? What do they need to present to get a grant or a loan?
Okay, sure. Yeah, thank you. So we definitely do startups. We love to hear from startups in just about any industry. I think about the only industry we can't fund is a startup farm. We can't, but we can add startup if you own a farm and you want to turn your corn into corn syrup. We can buy you the equipment to, or help you buy the equipment to turn your corn into corn syrup. That said, we don't offer grants. We're not in a position, we just don't have the funding and mandate to do that. What we can do is help you find grants and make some suggestions on, you know, how to structure them or put them together, and put you in touch with grant makers. But the short answer is absolutely, we love startups. And in fact, oftentimes we are able to help companies and startups and entrepreneurs that have run into difficulty elsewhere. In fact, one of the requirements for our startup loans is that either you have been the applicant, the applicant has been declined funding by a bank for any number of reasons, or the bank will only partially fund the loan. So if they're asking, I don't know, for just for easy math, 100,000, and the bank says no, the best we can do given whatever, you don't have enough collateral or your credit score is not high enough or something, we can do 50. The applicant can come to us and say, look, I only got 50 from the bank, but I really, really think this business is going to go. We're there to help close that gap. We call it gap financing. And, we're able to do that. In fact, that's a lot of what we do with startups is gap financing.
All right, so I finally got my mic working. Can you guys all hear me?
Yes.
All right, perfect. So my name is David Alimo, and I am starting up a startup. And what we're trying to do is we're trying to create a platform to help the younger demographics understand financial literacy, and so they can properly budget their finances from spending to saving to even receiving. And one of the biggest questions that I do have is, since we are getting this startup, we just launched our LLC not too long ago. And the major thing that I'm focused more towards is I don't know which route to take in terms of fundraising, either doing a fundraiser or in terms of taking a loan.
Well, I'll start with that's exciting and noble, and congratulations. The longer answer is, if you were to ask me, and I'm just one opinion, is your LLC I guess it's not a nonprofit, is it for profit?
Of course, yeah.
It is a nonprofit or it's for profit?
It is for profit.
Okay. Yeah, so back to plan, I really, really, really would encourage you to contact the local SBDC, Small Business Development Center. That's what they do all day long, is help structure plans, make recommendations for financing. They help you really fine tune and calibrate what's going to work for you, right? They work with you, not for you. I mean, they want to set you up to succeed. And my best guess, back to just one person's opinion, my best guess is that it would probably be a combination of public and private financing, given your mission and what you intend to do. There very well could be some grant opportunities out there. I would suggest that it's probably unlikely they would fully fund it, but it is certainly worth exploring options and looking for institutions that have granting institutions that have an interest in supporting literacy.
Thank you for your advice. I appreciate it.
Oh, of course. Yeah. No, thank you for asking.
Yeah, David, if I can also help you too along that path, I think it's important to understand, in your fundraising, you need to, have a financial plan that knows your costs, knows how much you need, and what it's going to take to go to the next level. It's going to take, like Sam said earlier, and further earlier discussion, it's going to take some forecasting on your part, 2 to 3 years out, and really, really know what it's going to take to function, per sale of each widget, per dollar of each widget, and then how much volume it's going to take to get there. And then what happens when you work with an SBDC consultant, then you kind of work that backwards to build the plan, and then kind of go from there. Because we have to back into kind of what it's going to take to get you started, and then what it's going to take to keep you going. And that almost becomes the challenge, is to find those numbers. So.
Thank you. I appreciate that advice as well.
But.
Well, if there aren't any other questions,
One thing I forgot to add before
Sure.
before we wrap it up really quickly, as a publicly funded organization, and being established this program really in the community interest, we also have a financing requirement for employment. So, meaning it's supposed to be ideally for every $30,000 that Region 9 finances, there should be one FTE hired. So if you're asking for, just for easy math, again, $60,000 over the course of 5 years, the expectation is that by the end of that 5-year period, there would be at least 2 new FTE jobs. That being primarily the point of the program is to, drive economic growth and employment in the region. We're not, as an organization, able to finance things like passive income, like a new housing development or something. While it might generate some construction jobs up front, over the long term, it's no new jobs added to the community. So keep that in mind. Again, not to discourage you from applying, but just keep that in mind when you're thinking about leveraging public financing. Know that that often is a parameter.
it actually brings up an interesting question. So I'm going to ask one more before I wrap up, which
Great.
is, in this online electronic world where, many small businesses that get started are going to transact business with people who are in lots of different places, and they may hire staff in lots of different locations. How does that impact that employment requirement if you create an app and then you work in the Mankato area and you hire someone from Iowa to work with you on your team? Or are you restricted to you must hire people who live in Region 9?
That is a really good question. And I say it's a really good question because I don't know the answer. Evidently, that's the litmus.
Okay.
Not something's a good question. I would suspect that so the structure of the way our lending program works, long and short, is myself and my colleague review an application. It goes to a committee of volunteer community members, much like a planning commission or a zoning commission would review a petition for a variance. They review a petition for a request for financing. And then that goes to our full commission to vote it up or down. Similar to how it goes to a city council or county board. My guess is that the review committee, we would bring them that application and they would probably send it back. But I don't know. That's a case where I've never had it happen, so I don't know what would happen. I would also have to go back into the roughly 30 or 40 page lending plan that outlines all of the parameters that have been codified and endorsed by the commission and the federal EDA. It may well be in there. I'm just not sure. But, if that comes up, it doesn't hurt to ask, It only takes 10, 15 minutes to apply at the most. So.
Very cool. Thank you. I made lots of notes, and
I hope some of them useful.
And I'm going to be keeping this recording because I often have students that I'm working with that are starting businesses, or they have a business. Like I'm talking to a young man right now whose parents own a business. They're hoping when he finishes his college degree that he's going to take over. But the business has been impacted quite a bit by COVID. And so he's real worried about that. And so anyway, I'm gonna talk about this with him and say, hey, maybe this is something for you and your parents to look at together.
Back to slide 1. There's a lot of people out there who really, really want businesses to take their money. I mean, us among them. We at Region 9, we're not in it for the profit, but we have a mandate to issue these loans. And aside from the obvious reason that it's the right thing and good thing to do to help these businesses stay open, it's just, our boss tells us to, right? I mean, that's it's our we have to get this money out the door, but we can't until you apply for it.
I'm going to wrap things up. It's 5:30. We have I really appreciated this, Sam and Corey. Thank you so much for setting this up. This was very informative and interesting. I'm sure it's going to be of great value.
I hope so.
Everybody who watches it, this is me. Tomorrow we have 3 great events for Global Entrepreneurship Week, and I wanted to make sure that you knew about them. The SBDC has Mike Beck from the St. Paul Saints coming to speak over the lunch hour. And then a short small business award ceremony where they're going to give away some awards. And that link I put in chat will get you to that. We have Maha Abu Elanim, who is a rock star working with Gary Vee, the internationally known marketing and public relations person. She works with him at VaynerX in Dubai. She'll be joining us from Dubai tomorrow at 4 o'clock. For our Women in Business Leadership event. It's also Women's Entrepreneurship Day tomorrow. So Maha's going to help us celebrate. We're going to do a fireside chat with her and talk to her. So if you're into marketing, if you're into digital stuff, you're going to definitely want to come to that because you get a chance to talk to one of the best in the world. She helps Bono. She helps companies, Fortune 500 companies to get their message out appropriately in the Middle East. And then we're going to cap off the end of the night tomorrow night. I'm going to put that last link in here for you. The end of the night tomorrow night is Big Ideas, how to enter and win venture competitions. In addition to all of the things that Sam talked to you about tonight in terms of where to get money, another great way to get money, especially if you're a student, because there's lots of them, but even if you're not, there's venture competitions all over. Minnesota Cup, our venture competition, Big Ideas Challenge, the Rice Business Plan competition. There's dozens and dozens of them all over. And I'll tell you about them tomorrow night and how to enter and win. So thanks for coming tonight. Have a great evening. And thanks a lot again.